Good morning. Happy Wednesday. Hope everyone's enjoying their week so far. I want to talk today about stop loss orders. These are very important tools for both traders and investors, but much more important for traders, in my opinion. These are very important tools to implement into any trading strategy to make sure that we are managing our risks and that trades don't get away from us. Because most traders usually tend to target more volatile stocks that are going to move. That's how we make our money. You need to have a system for risk management. No matter how long you've been trading, no matter how successfully you're able to predict market moves, not every trade's going to go your way. So you have to have a contingency plan, when trades get away from you. So wanted to talk a little bit about stop losses, how I use them, and how I think you can easily implement these valuable tools into your strategy. So a stop loss order is just kind of what it sounds like. It stops your loss. It minimizes your loss at a certain level, and it's an order that will execute automatically when a stock goes in the direction that you don't want it to go. So the way that I use these things, and the way I think all traders in some way, shape, or form should be using stop losses, is by first determining the maximum amount that you're comfortable losing in any given trade. That way you can prepare yourself for the worst and work backward from there to determine the level at which you need to place your stop loss order so that you never exceed that amount you're comfortable losing. So again, the way that I do it, I have a little chart I made up, and I do it by position size. As traders, we're not trading, every stock is not the same price. So, we have our capital that we're using and we're putting to work in the market, and based on the share price of a stock, that's going to determine the position size we're able to take and the amount of shares we're able to purchase or sell short or whatever we're doing. So that is how I use that. I use that in conjunction with the amount I'm willing to lose in order to determine where I need to place my stop loss order. So I'll give you an example. Let's say this month I'm comfortable losing on any given trade $500. Okay. And, I have a stock that I'm looking at, and I want to take a long position. So I want the stock to go up, and I want to buy about 4,000 shares. So I have 4,000 shares of the stock, and I've paid $1 per share for each share, okay? And I'm comfortable losing $500 on this trade in worst case scenario. So I've paid $1 per share, and I have 4,000 shares. So the most I'm able to lose is 12 cents per share. So I've paid $1, and the most I'm able to lose is 12 cents per share, again, based on that $500 maximum loss. So where do I need to set my stop loss order? Well, the most I can lose is 12 cents per share, and I've paid $1 per share, so I need to set that stop loss order at 88 cents per share. And that way, I can take some anxiety out of the trade, and I know that in worst case scenario, my stop loss is going to be executed, and I'm going to lose that $500. So if I had, let's say, 1,000 shares, well, now I have a little bit more wiggle room. Now I can lose 50 cents per share. So if I have 1,000 shares of that same stock and I've paid $1 for it, well, now I can set my stop loss way down at 50 cents per share. So it really depends on your position size, and also, the amount that you're comfortable losing on any given trade. So that's how I implement these tools, and I think it's an important asset in the repertoire of any good trader. So hope that provides a little bit of insight, sheds a little bit of light for a few people. Everyone have a great day. Take care.